Hello everyone, good morning, good afternoon, good evening, welcome back. We are continuing with the basics. Yesterday we started with the basics, very slowly we started. We are following a grain by grain, brick by brick approach. We are going to build on that today. I'll take you through budget documents also. From the very second day of the content, we are going to read and we are going to acclimatize ourselves to reading government documents. See, I always prefer primary source of information compared to secondary. Don't think that government documents are very complicated. You don't understand. You will not understand now because you don't know things. When you will read polity, especially the parliament chapter on finances, center state relations chapter, and in that also financial relations chapter, you know, when you'll read about the consolidated fund of India, contingency fund of India, you'll realize that it is very easy to understand these basic economic documents. Chalo, like always, quickly we'll revise. What did we see yesterday? We saw a circular flow of economy, right? What is circular flow of economy? The flow of resources, monetary resources from one entity to another entity, and real resources, which is labor and etc., from the other entity to the first one. This is a simple two-sector model. In three-sector model, we introduce government also. In two-sector model, the two parties are, who are the two parties? Firm and households. In the three-sector model, we have government also. In the four-sector model, we have world market also, right? Which gives rise to the equation C plus I plus G plus X minus M. Try to explain, try to recollect what is this, try to recollect what is C. What is C? C is consumption expenditure, expenditure which is done on consumer goods, expenditure which is done on goods which do not have a long utility, which do not involve a long outflow, right? Which are the goods which have a long outflow? What are they called as? They are called as capital goods. So whatever expenditure you are doing on capital goods, what are capital goods? Goods which are used for production of further goods. Those are capital goods. They are known as capital goods. So expenditure done on them is known as investment. Okay? We introduced a third entity in the three-sector model. Expenditure done by government either on consumer goods or on investment will come under government expenditure, right? Now you will see, today you will see why this is so important and why today RBI ho, SEBI ho, finance ministry ho, or anyone who is dealing with economics or Indian economics will resort to this equation always. I'll tell you why. And this is the fourth entity. This is the world market entity. This is net exports, right? Exports minus import. Okay. What did we see? What else did we see yesterday? What is the definition of GDP? What is definition of, I taught you only one definition. Other than that, everything is just concept. Okay. See, I love that scene from Three Idiots movie, the machine wala scene, you know, where he just gives the definition by rote learning and teacher demands that, and Amir Khan says, matlab bhi to samajhna chahiye. You should understand the meaning also. Simply reading books and by-hearting them is not advisable for economics. It might be advisable for history or geography because there are some things you need to memorize, the dates and all. But in economics, please trust me, you have to understand why some things are happening, why some things are not happening, and when to use these concepts, when not to use. Then only you will be able to write excellent answers. You will be able to mark correct answers in your MCQs. Okay, this is the fourth. This is the net exports. What is the definition of GDP? GDP is the, try to recollect, please try to recollect. GDP is the what? What is GDP? GDP is the, try to recollect. GDP is the final value of all goods and services. There are two keywords here. Okay? There are two keywords, final and all. Okay? Final value of all goods and services produced in the economy during a particular period. Now that period for our study is normally 1 year. It can be 1 month, 1 quarter, 1 week also. Okay? So GDP is the final value. Final value. Remember final we saw yesterday. Why final we take? Because we reduce intermediate goods. Sir, what are intermediate goods? Intermediate goods are goods which are used in further production. Okay? So intermediate goods are already counted as final goods once. So to avoid double counting, we reduce intermediate goods from the second final goods. We saw the example of cake. Okay? So 200 rupees cake we sold, but 50 rupees we reduced because that 50 was already counted when the farmer sold the maida to the baker. Okay? Those are intermediate goods. Final goods of all the goods and final value of all goods and services, everything produced in the economy. Now tell me one simple thing, very simple thing. You will demand all list, okay, give me a list of all products, right? But for those products, there are for whom or whose records are not available with the government, or they are not recorded. Let's say you are producing 10 boxes, but you have no filings, no document about that, government doesn't know about you. So that will not come in this, because there is no record of it. How can government know? Okay. So we'll come to that, we'll come to the limitations of GDP, but I just focus on every word, just focus on each and every word which is given in the definition. This is GNP. Chalo, what do we, this is GDP. What do we reduce from gross to arrive at net, and what is the logic behind it? There is something called as depreciation. What is depreciation? The definition says it is a reduction in the value of an asset resulting due to XYZ things. But basically it is efficiency loss which results due to usage, which results due to passage of time, which results due to normal wear and tear, right? So why do you reduce depreciation? Because that is an efficiency loss. Your GDP is gross amount. You have to reduce your efficiency loss and then arrive at the net amount. Net, how much I am getting? That is net domestic product, NDP, right? What about national and domestic? What is the difference between gross domestic product and gross national product? What do you think is the difference between GDP and GNP? क्या होता है? What is the difference? We saw something called as net factor income from abroad. Do you remember net factor income from abroad? What is that? Now we will speak in NFI terms. I will not tell you plus this, minus this. I hope by now you know net factor income from abroad is income of Indians. You add income of Indians who are outside India and you reduce income of non-Indians who are in India. In domestic, you don't see whether Indian or not, you only see who is there in our country. Okay? In national, you see national beyond the country borders. You see on the world how many Indians are there. Here there are 2 Indians, here there are 5 Indians, here there are 10 Indians, and in India there are 50 Indians. Total sabka le lo. But in India there are also foreigners who are producing. So you reduce them. So that is known as net domestic product. Is it possible to have a net national product? Yes, you reduce depreciation and you get net national product, right? ठीक है, everyone? Did you understand this? Right? Now, yesterday I told you something about transfer payments also, if you remember. I gave you an example of scholarship, transfer payments. I gave you an example of scholarship, right? कि transfer payment क्या होता है? Example, transfer payment. But I did not tell you what is the logic behind it or what does it mean. So we'll come to that. Very, very, very important thing that we saw was what are the factors of production. Sorry, there are 4 factors of production: land, labor, capital, enterprise. There are 4 factors of production. 1, land. 2nd, labor. 3rd, capital. 4th, enterprise. Land gets what? Land gets what? Rent. Capital gets what? Capital gets what? Interest. Enterprise gets profit. Labor gets wages. These are the 4 factors of production which are used. We peeked behind the curtain and we saw कि firm के पीछे who is behind the firm, who is actually producing this. ठीक है? We saw that we saw in the baker wala example, we saw the 3 methods of calculating GDP. Did we see 3 methods of calculating GDP? What was the first method? Any one method which comes to your mind? Let's say expenditure method. Expenditure method mein you take a list of all kharcha, all expenses happening on the final goods and services. Okay? That is the expenditure method. Okay? Expenditure. We saw in our example, final kharcha was 50 rupees. You bought maida of 50 rupees and you bought cake of 200 rupees. Second method was income method or factor income method. You saw ki how much is every factor of production getting. That must be the income which is earned by the entity, and that must be the GDP because that is what is produced. And then we saw a very important method which is output method or production method or product method or most important dash method. What do you think? Value added method. And this value added, I also told you this same principle applies in taxation, in indirect taxation also. Okay? And this is not something very unique to India. It is unique to economics. All world economies or all major world economies follow the same concept. So we are not doing something very unique to India. When something very unique to India will come, I will tell you, in the world this is not followed, but in India we follow this along with the reasons. Like I told you yesterday, in the world the year is from 1st Jan to 31st December. But in India we say financial year is from 1st April to 31st March. Reason being, please refer geography textbook. In that you have those agricultural months, right? 6 agricultural seasons you have, Varsha, Rutu and all of those. So that is why we follow, though normally they start from April onwards. So we follow a financial year of April. But since we are transitioning from an agriculture economy to a service based or industrial economy which might not need April to March year we are thinking about doing this. Okay, so this all is done. Then in the end what we saw, in the end we saw that the 200 rupees which you gave to the baker, the cake you purchased for 200 rupees, the final value of goods and services which you purchased and you gave 200 rupees ka note to the baker, we saw that out of that 5 rupees was the tax. Do you remember we ended in this, that 5 rupees was the tax. That entire 200 rupees is not the income, entire 200 rupees is not the factor income, right? Entire 200 rupees is your expenditure, but out of that 5 rupees is not reaching the baker, it is going to government, it is going as a tax. Okay. So now how to calculate this? So just bear with me, I told you that GDP is nothing but total production into the amount. So if you produce 100 units and if the price is 5 rupees, GDP would be 500 rupees. Okay, normal hai to. It is very normal, it is very basic. So in our example, let us continue our example. We saw 200 rupees ka one cake. Okay, we saw 200 rupees, I'll write it here. One cake of 200 rupees. Okay. Now I tell you, suppose I tell you in that there is the bill value is 200 and if you see bill value के ऊपर GST होता है, GST के ऊपर before GST the amount is there plus GST and this comes. So if I tell you that bill value is 200, you bought a cake for 200 rupees, you demanded the bill, in the bill you saw 200 is the final amount. Okay. And if I tell you GST is 5 rupees, let's say. Okay. So to arrive at the actual amount, to arrive at the actual sales value, what will you do? You will add 5 rupees to this or you will reduce 5 rupees from this? What will you do? What do you think? I tell you the final bill value is 200 rupees. Final bill value. I want to know ki what is the actual value of the product. So remove GST and all of that. So what will you do? You will add GST or you will remove GST or reduce GST from this? I tell you 5 rupees is the GST. Okay, I tell you 5 rupees is the GST, you get a bill of 200. You go to a bakery, you purchase a cake for 200, you get a bill of 200 and you want to know the actual value. You get the final bill of 200. So will you add 5 or reduce 5? Plus 5 or minus 5? You will minus 5 because you want to know the actual value, is it not? GST though will go to the government. You want to know actually how much is the product worth. Plus 5 rupees GST and then you pay 200. You will pay 200, no doubt about that. Okay? So to arrive at the actual value, what will you do? Will you add it or will you reduce it? You will reduce it, right? So 200, you will reduce 5 rupees. Okay? To arrive at the actual value, yes or no? So you notice that 195 is the actual value. You paid 5 rupees GST and 200 is the value. Okay? Then the baker sees you doing this calculation. The baker asks you, why are you reducing 5 rupees? I need 200 because 5 rupees I have to pay to the government, baker will say. So you say, no, I will give you 200 only because bill is of 200, but I am just calculating how much is the government taking from us. Okay? How much is the government taking from us? Is the government taking this? Yes, this is going to the government, this will go to the baker, right? And this is paid by you. Okay? You buy anything, you will come to know, even if you do a phone recharge, that will have an amount of GST in it because it's a telecom service, right? This will go to the baker. So the baker will ask you, what are you trying to find exactly? So you say, I am trying to find how much I am paying and out of that, how much you are getting and how much government is getting. So baker will say, okay, but this 195 which I have, which you have calculated, this is very good that this will go to the government, but actually 195 is not my 195 is not my cost or 195 is not what I am getting exactly because the government has helped me in some manner. So you will ask, what do you mean the government has helped you in some manner? So you will say, sir, what happened was that government has given me a subsidy. So for all the bakers in the city, government wants to increase or wants to enhance the production of cakes because the cakes are getting too costly. So government wants to reduce the cost and all. So government has given me subsidy. So now you tell the baker that I don't understand. Okay? So now baker tells you, sir, let me give you an example. Baker tells you, right? So baker says, sir, my labor my maida cost, my oven cost, my electricity cost, my own profit, everything mila ke, I arrive at a cost of, let's say, 170 rupees. Okay? I arrive at a cost of 170 rupees. The government says 170 is too costly because you will add GST to 170 and you will reach higher amount. So the government says ki 170 is too costly. You will take a subsidy of, let's say, electricity subsidy. If you are baking a cake, if you are a bakery, you will get an electricity subsidy. Sir, what is subsidy? Subsidy is nothing but discount by the government. So normally people, let's say if they get electricity at 12 rupees per unit, you will get it at 10 rupees per unit. That is known as subsidy. Subsidizing means to reduce the amount of discount basically. So government is giving bakers a discount of 10 rupees. Okay? So what the baker will do is, baker will calculate his cost. Baker calculated his cost. Baker, now for 2 minutes forget this, just leave it at 195, we'll come to it. 170 is the baker's cost. Then he saw that subsidy is 10 rupees, let's say. He will reduce his 10 because uska cost kam ho gaya na, his cost is reduced, is it not? Okay, see, try to understand, when you are making a product, you will add your own cost, you will add your profit, and you will say ki this is my final cost. But the government is telling ki your electricity, how much you have taken electricity, you will say, sir, 12 rupees I have taken in my cost. Government will say, you take at 8 rupees. You take electricity, we will supply electricity at 8 rupees. Simple example, tomorrow if the farmer reduces the maida price, you will reduce this price also because your cost is reduced. Similarly, if the government is providing you electricity and if it is reducing electricity price only for you or only for people like you or only for in a region, specific people in a region or for everyone in a region, irrespective, you will reduce your price, yes or no, because your cost is now reduced because government is now subsidizing you. Okay? Farmers are subsidized a lot. Farmer get almost free electricity, farmer get almost free seeds, farmer get pesticide subsidies in pesticides and all of that. Okay? So their cost is reduced. So now what we are trying to arrive at is, we are trying to arrive at 200 rupees. Why the baker is charging 200 rupees. Okay? So now what I do is ki 170 is my cost. Chalo assume ki maida cost, electricity cost, packing charges, oven charges and labor charges and everything मिला के 170 comes. ठीक है? 170 में I will add my profit. I am a baker. Assume कि इसमें profit नहीं है for this. I will add my profit and I will sell. बराबर? That is what normally happens. You produce something, you total your cost कि कितना हुआ, how much is the cost, you add your profit and you sell it. In a hotel, when you order a dish, they will also cost it. Ki how much vegetables are in this, how much rice is in this, how much masala is in this. They will add the cost and they will say ki 10,000 rupees for, let's say, 100 kgs of rice or 100 kgs of a dish. Then they'll divide it by one plate and then they'll add some profit margin and then they'll serve you, and that will be the menu price. ठीक है? So I saw 170 में how much is the maida cost? 50 rupees maida. ठीक है? Let's say for example कि 40 rupees is the labor cost. ठीक है? Let's say transport, packing and everything else again cost 50 rupees. Transport and packaging. कितना हुआ? 140 is the total. ठीक है? Let's say 30 rupees is electricity charges. This is 30. Huh? कितना हुआ? 170 is my cost. ठीक है? I will add my profit 30 rupees. I will sell it at 200 rupees. Assuming no taxes, nothing is there. ठीक है? This is a normal process. Government calls me. Why are you selling at 200 rupees? I gave government this document. Sir, this is my cost. My profit is 30. I will add it and I will sell it. Government said ki we will give you subsidized electricity. We will give you electricity at not 30 but 20. We will give you electricity at not 30 but 20. So will you reduce the cost? You will say why not? Because if my cost is reducing, I will pass on that to the consumer. Simple. So you reduce this by 10 rupees because यहाँ पे 10 rupees has reduced. So now your cost is how much? 160 rupees. Your cost is how much? 160 rupees. Now what is missing here? which component is missing here? Your own profit. You will add, na, this is your cost. Always remember, cost plus profit is selling price. This is CSAT. This is maths. है ना? Cost plus profit is selling price. What you pay for your mobile phone includes profit element and the cost element. ठीक है? So cost plus profit is selling price. 170 minus 10. Now this is your cost. This is your cost. This is your cost. ठीक है? Now you will add your profit. You say ki I have created this bakery. This is my own hard work. So you add your profit as, let's say, 35 rupees. You added your profit as 35 rupees. How much is this now? 195 हो गया. With profit everything 195, which includes the subsidy of 10 rupees also. Otherwise the cost would have been 205 with profit. Yes or no? Sorry, the price would have been 205 with profit. Yes or no? But now it is 195. Then you sell to the customer. Customer comes and you sell the cake and ask the customer to buy at 195 rupees. Customer will say how much? You will say 195. Again government will call ki you are not taking GST from the customer because we will take it from you. We will charge GST from you. You are not doing that. ठीक है? So you say ki sir, but GST zaruri hai. Then government says yes, GST is required. GST is a tax on all sale and all transactions of sale of goods and services. So you are selling a good, GST to lagega. Government will take tax from you. Why the government will take tax on this? That will do in tax chapter. Okay? But just assume ki he is ready to sell at 195, but he cannot sell because government will say ki 5 rupees I will take. So he will say, why should I pay from my pocket? I will recover from the customer. So he will add 5 rupees in the bill. Okay? And how much will he charge from the customer? 200 rupees. Now, did you understand all of this? Did you understand the maths? Okay, it is very simple. First step, baker will do his costing. 30, 50, 40, 50. 170 is the costing. Second step, he will add profit, let's say. Okay, third step, he gets a call from the government to that we are giving you a subsidy. He will reduce his cost. Okay, he is willing to sell at 195. But government also says that we will collect tax. So baker will say, why should I pay from my pocket? Because if he pays from his pocket, he will get only 190, not 195. So he will add it to the bill and he will take 200 from the customer. Now out of this 200, 5 rupees he will tell to the government, enjoy your life. 195 he will be happy. In that 195 he gets a profit of 35. 50 rupees he will give to the maida wala, 40 rupees he will give to the labor, 50 rupees he will give to transport and packaging wala, and 20 rupees, now it is 20 not 30, and 20 rupees he will give to the government in the form of electricity charges. Is it clear? Okay. Now tell me, now most important part, tell me what how many of these components is government involved? In how many of all these components is government involved? Batao. In how many of these components is government involved? Is it this? Okay? See, don't think that government is providing electricity, that is why government is involved. Government is providing a subsidy, that is why government is involved. Okay? There are a lot of services which government provides, but water charges ho gaya, which we have not included here. But water is also provided by government and it might not be subsidized, just in case. So subsidy mein, so I can say government is involved in a subsidy and government is involved in a tax. Yes or no? Barabar hai? Are you understanding this? Okay? So government is involved in a subsidy, government is involved in a tax. Now, coming to our equation, what was our equation? My cost 170. My cost 170. If I add my profit, chalo, if I add my profit, how much was the profit? 30? 30 tha na? 35. If I add my profit, 205. See, if government was not involved, I would have sold at 205. Sir, simple. If government is not involved, I will sell it at 205. Simple. 170 is my cost. My profit is 35. 205, I will sell it. Okay? But government is meddling in your affairs in two stages. One, it is meddling somewhere here. Second, it is adding a third component, which is tax here. Okay? So what you do is, so if government is not involved, this is simple calculation. Baker will say ki you go, you are giving me headache. Okay? Now, is a profit a factor payment? Yes or no? I ask you this. Is profit a factor payment? By now you should be able to tell me, is profit a factor payment? There are 4 factor payments if you remember. Rent, interest, wages and profit. Profit is a factor payment because we ourselves, we entrepreneurs are also factor of production. It is our brain which is here. So how much is the factor payment being made here? Out of total, how much is the factor payment being made here? The factor payment is entire 205 because everything, this cost will also I'll distribute it to the people. Na? So this is the cost. Okay, this is the factor payment. Raw material also I will give him. So this is the factor payment. Barabar? Now I call this as factor cost. I call this as factor cost. Why? Because it is a factor payment. This is my cost. You know, my profit is also included because it is a factor. I call this as factor cost. Are you understanding? This is fairly simple. See, this is the detailed calculation, but to simplify things, I have written ki cost 170 a factor cost. My also 35 is also factor cost. 205 is the total factor cost because 35 I will keep. I am also a factor of production. It is my own bakery. Okay? Factor cost. Government calls. Things start getting messier now. Okay? Government calls, government says ki, sir, your cost is very high. What can we do to help? Government asks you, what can we do to help? You say ki, sir, I saw that electricity is very high, sir. Factor cost, electricity is very high in the cost. Can you do something about it? Government says, okay. Ho jayega, sir. Government will say ki, I will give you a discount of 10 rupees. You know, government attitude. You give us 5 rupees, we'll give you 10 rupees. Okay, government says ki, ho jayega, sir. No problem, we'll do it. So, government gives you a subsidy. What kind of subsidy? Electricity subsidy. Is it used in the production process? Yes. It is used. Na? Electricity is used during the production process. Okay? So let's say government gives you an electricity subsidy, and it is just an example. Electricity subsidy of 10 rupees. Aa gaya electricity subsidy. From the moment you get that discounted rate, from the moment you get that 10 rupees back, you will reduce this instantly. Hi Anna, barabar hai. Assuming everything else remaining constant. What did you do now? 170 minus 10 rupees is how much? 160 plus profit 35 rupees. How much is this? 195. You are willing to sell the customer at 195. Now please pay attention. You will get very confused in this. So please pay attention. These terms are very important. These are the 3 probably most important terms of the first basics thing. So is this clear? I am going very slow. Is this clear? Cost 170, profit 35, 205. If government was not there, you are willing to sell the customer at 205. Finish. Simple transaction. Government call, government said ki we want to reduce cost. What can we do to help? You say ki sir, please, electricity is very costly. It is consuming a large part of it. Please do something. Okay? So government will subsidize electricity, which means you will have to pay 10 rupees less in form of electricity charges. So if 10 rupees you have to pay less, which means 160 you have to pay for all the factors. Okay? And you keep your profit unchanged. You will say, why should I reduce or increase my profit? Okay? You can increase your profit also to keep it at 205. But government has said ki we want to reduce the price. If you don't reduce the price, we will not give you 10. So you will not increase your profit. Remember this line. Banks are increasing the profit whenever government is giving them a subsidy. We'll do this in banking chapter. Okay? Hi-fi word for that, fancy word for that is known as monetary policy transmission. Not happening. Oh sir, too advanced sir. We are in first or second class sir. Please come back sir. Fine. Okay? Electricity subsidy rupees 10 rupees mila on the condition that profit remains unchanged. Otherwise, why would government subsidize? So now, is the final cost to consumer reduced? Yes or no? Earlier it was 205, now it is 195. Why? Because government has subsidized it. Chalo, very good. But at the point of production, now remember this thing. Remember this thing, taxes are levied at various stages. You as a consumer, you pay tax only at the end stage when you purchase a thing. But as a, like I told you in the first lecture, you know, in economics you have to view it from the eyes of the seller most of the time. As a seller, you have to pay tax on a lot of things. On electricity also you have to pay tax. You have to pay tax on your inputs also. So during the production process only you have to pay a lot of taxes. Final tax to dur ki baat hai, you know, those that 5 rupees which we saw, this is at a very last stage. This is recovered from the consumer, is it not? But in between also you have to pay a lot of taxes. So let's say you got a reduced electricity bill. You are making your cake. You added your profit and you did this. A government inspector comes to your factory and says ki where are the production taxes in this? Where are the factory taxes in this? ठीक है? You say ki sir, but I am not selling it now. Tomorrow customer will come tomorrow and take GST. So that guy says, I am not from GST department. I am from some other tax department. I am here to take tax on production. I am here to take tax on production. You are producing all this. On that also we need tax. Okay? The correct word for tax on production is excise duty. Have you heard of something called as excise? EXCISE. It is nothing but it is a tax on production. You are taxed only because you produce. Sale is different. Sale pay tax is different, sir. But will it not be two taxes on the same thing? Exactly, and that is why we brought in GST. But again, that will happen in taxation chapter. No need to confuse yourselves. Simple. So now here, factory tax wala comes. Factory tax wala comes. Okay, I'm complicating this example a bit further. Factory tax wala has come now. Okay, factory tax wala asks you for a tax of, let's say, kitna lenga? 2 rupees, 5 rupees, chalo. So now what will you do if excise tax wala, government wala is asking you a tax of 5 rupees, will you pay it from your own pocket or will you add it to your bill? You will add it to your bill ki sir, tax hai. So you get excise. We'll give the name as excise. Sir, but excise is subsumed in GST. I know that, but we are trying to understand the concept here. Excise duty, kitna? 5 rupees. ठीक है? What is your factory cost now? मतलब वो your customer has not even arrived yet, but still in your factory, laying in your factory only, how much is the cost now? How much is the cost? 200, because you will add this. You had reduced this, but you will add this now. 200 is your factory cost. It is the cost of production. ठीक है? Sale नहीं, sale is different. You might not even find a customer, but it's the cost of production now. ठीक है? Next day, you ready your men and you tell कि customer is coming. We want to sell it to the customer. बराबर? Next stage, we want to sell it. Electricity subsidy, excise duty, ठीक है? 2 interventions by the government at the production stage. Yes or no? This is happening in the factory. ठीक है? 2 interventions at the production stage. Next, you go to sale stage. Sale stage means you just have to do a transaction of buying and selling. So normally what you will do? You will tell the customer, sir, 200 rupees final. Government calls. You say, Arey Manus, why are you calling? Why are you complicating? This was simple life I was living here. Why are you doing this? Government says what is the principal raw material in cake? Maida. So for example, government says ki if we reduce the cost of cake, more cakes will be produced, more maida will be bought and farmers will get more money. So by the rough intention, by that, just an example I am giving, by that intention, government says ki whenever, how much cakes you sell, to encourage the sale of cakes, how much cakes you, like whatever quantity of cakes you sell, uspe we will give you 3 rupees subsidy. You say ki sir, why you are complicating so much? Government says ki that is how economics is. Government says ki you want to become an officer, please learn to deal with it. ठीक है? Now government is giving a subsidy on sale of cakes. Now please differentiate here. This was a subsidy on production of cakes. This is a subsidy which will come, which is on sale. If you produce 100 cakes, you will get this subsidy. If you sell 2 cakes, you will get only 2 of that subsidy. Are you understanding? Government is giving a subsidy on sale of cakes. Subsidy is also different types. Input subsidy, output subsidy, implicit subsidy, explicit subsidy. This is all mentioned in your syllabus point number 5. Okay. So, this was a production stage. So, let us name it. Let us name it. This was simple stage. This was simple stage. This is your production stage. And this is your sale stage. ठीक है? ठीक है? Understood? Now, you are, government comes and government says कि चलो सेल पे हम सब्सिडी देंगे आपको. You should be happy. You are getting a subsidy on sale. So let's say government subsidizes it by कितना ले लो? 7 rupees ले लो. चलो, let's say government subsidizes it by 7 rupees. So you can say it as a sale subsidy or subsidy on cakes ₹7. ठीक है? Subsidy on cakes is ₹7 now. Are you understanding this? Subsidy on cakes is ₹7. You will be like, arey yaar, what nonsense is this? Again, you will change your calculations now. Why you will change your calculations? You will say कि चलो 200 तो है ही, so you will take 200 here and you will reduce 7 rupees because you have got a subsidy on sale. So in the final bill to the consumer, you will reduce that 7 rupees because you are getting a subsidy on sale. See, if you have to, if government is taking tax from you, you are a seller. If government is taking tax from you, you add to the bill and you tell customer to pay it. If government is subsidizing you, you reduce it from the bill. It is opposite. Okay? These are opposites. This is opposite to this. This we are adding, this we are reducing. Chalo, 7 rupees. How much is the cost now? 193. Okay? Understood so far? If you have any doubts, please in your next doubt session, please clear it, or you can message me instantly also the moment you see this lecture. 193 will be the bill amount. Ki, sir, finally take this. But you see someone running and coming from there. Who is that person? That is a person who will collect tax on sale, because we are in the sale regime here. This was a production regime. This is a different guy. This is a different guy. What will he collect? GST, because that is a tax on sale. You will be like, मैं बेहोश हो जाऊंगा. I'll just fall down. Have you seen Friends? You know Friends series? In that there is a scene when Ross is in his apartment with Mona and Rachel's father comes in. That is a very funny scene. And you know, both keep on talking. And then finally Ross says, no, no, no. And then he sits down and he says, I need to lie down. That is the condition which we all face while understanding this. That is the condition which this baker will face when he sees that guy running and coming from there. He will say like, no, no, I don't want to. I want to close this business and go. So much of it is complicated. We are trying to simplify it. Okay? What that person will ask? That person will ask, sir, give me GST. That person will ask, sir, GST, sir. You ask, okay, fine, how much GST? That person says, sir, GST, sir, 12 rupees, sir. 12 rupees GST, sir. You say 12 rupees. Then that person says, yes, sir. Now what is true? You have to live in India, please live with it. 12 rupees GST. Okay. Now, will the baker pay out of his pocket? Will the baker pay out of his pocket? No. He will add to the bill. This is reduced from the bill. This is added to the bill. Finally, bill कितने का बनेगा? Final bill. ठीक है? This is the final bill of 205. See, the amount is different from the earlier example because the earlier was a simpler one. Here we have introduced 1, 2, 3, 4 variables now. But did you understand the role of these 4 variables? In simple regime, cost मेरा इतना है. This is my factor pay. 35 is my profit. Total is my factor cost. 205. Government comes. Government say, I am going to give you a production subsidy, not product subsidy. Production, not sales subsidy basically. Production के time whatever subsidy you are getting, you will reduce, and whatever tax you are getting on production, you will add to the bill. ठीक है? Chalo, simple. Next day you go to sale and you say ki, and the government again calls you and say ki, acha, you are making sale, I'll give you subsidy, don't worry. You say ki, fine, I reduce that subsidy and give to the customer, but before giving to the customer, that GST inspector comes and tells you ki, sir, but I need my share. You ask him, how much is your share? He says, sir, 12 rupees. Then you say ki, okay, fine, I will recover it from the customer, big deal. Ultimately, government is only contributing to the increase and decrease in prices. Do you agree? Yes, government is only contributing. You are very happy here, but government is contributing to the increase and decrease in prices. Now, most important, why are we doing all this saga? Why are we dealing with these things? This is called as factor cost. This is called as factor cost. This is called as factor cost. Acha, out of 205, 200 and this second 205, these are different 205s because we have calculated it differently. What is the amount which the customer will pay? What is the amount? 205. Okay. What do we take in GDP? Final value we take of all goods and services. We take 205. We don't take 205. We take 205. If you agree with what I am saying. Okay. We don't take 200 of course because it's a transitionary figure. So this 205, I don't know where to write, but this 205, I'll just ठीक है. This 205, please pay attention here. This 205 in economics parlance, in common words, in English words, and the same term is used in economics, is called as market price. This is the final amount paid by the consumer. This is the final amount paid by the customer. इसके आगे कुछ नहीं, nothing more beyond this. This is called as market price. ठीक है? So if I tell you what is the market price GDP of India, you are expected to multiply 100 cakes into 205. This वाला 205. ठीक है? This is called as factor cost. If I ask you how much is the GDP factor cost, you will take 100 cakes into this 205. ठीक है? In our example, the amounts have come same, but this amount, if you change 7, 12 or 10, these amounts will vary. ठीक है? This is called as market price. Sir, what about this? This is a, do you agree this is in between this and this? This is a transitionary stage. It is in between. This is called as basic prices. These are known as basic prices. These three terms are very, 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 very important. These are known as basic prices. These are known as basic prices. Factor cost, basic prices, market price. All three are very, very, very important. All three concepts are so important that UPSC asks questions on these directly in the exam also, and in your mains also you have to mention these. Whenever you mention GDP, you can mention GDP at market price. In the newspaper, I can just Google search and I can show you 5 to 10 articles in one tab only which mention these terms along with GDP. GDP at basic price, GDP at market price. Now, very quickly, do you remember yesterday we saw that sum of GVA of all sectors combined make GDP? Yes or no? We saw value added method. We took value added of steel, coal and every service and every goods. We combined them and then we achieved that then we achieved GDP. Okay? Summation of GVA was GDP. Yes or no? So normally in Indian economics, normally GVA is calculated at basic prices. Why? Because we are calculating value added. These come at the sales stage. So we ask steel manufacturer, sir, what is your base price? Okay? Right? Do you know? Normally, do you know that there are 3-4 rates of GST? 12%, 18%, 28%. This is common knowledge. Barabar? How many products and how many industries are there? Hundreds. Barabar? Steel, maybe there are so many types of steel, coal, there are so many types of industries, aluminium, and services are of hundreds of types, but tax rates are only 3-4. Okay? So what you do is you call each and every industry representative or each and every factory and you ask them their basic price. Why? Because this can be applied uniformly depending on the product. Steel pay 12%, so all steel industries will get 12% GST. Yes or no? Okay? Similar, so that is why you call every one of them when you are taking value added, GVA, gross value added, you ask them submit basic prices because this is specific to entity also. Sometimes some industries, small industries will get subsidy, large will not get. Similarly, excise duty or taxes on production also. So we in India, we calculate GVA, sectoral GVA at basic prices. we combine them, and we apply the tax rates accordingly. And we achieve GDP at market price. This is how it is done in the back end. Now books will not tell you this much. NCERT might tell you this, but other books might not tell you this much. But the problem is that when you read newspaper, this is never explained. So sometimes you will find word at GVA at basic prices, sometimes you will find the word GDP at market price. You will realize what is the difference. Now the funny thing is, even if you try to read the difference by googling it, you might not understand. I'm not saying you will not, you might not, and that is what happened with me. I'll tell you why. This line would be mentioned, 2 lines would be mentioned, but just imagine without all this explanation, you read these 2 lines randomly. The difference between factor cost and basic price are production related interventions. Production. The difference between basic price and market prices are product related interventions. Did you notice the difference? Just imagine now randomly reading this somewhere as an explanation. Would you have appreciated this, or would you have understood the depth of this? Production related and product related. This is product related. This is specific to product, and this is only on sale or only on the final transaction, right? You are selling cakes, that is why you are getting here. This is production. In your bakery, you might produce some other products also. You might get the same electricity subsidy. Let's say you produce pav. Okay, you produce pav also. You might get this, but on pav the GST might be different, or on pav the subsidy on cakes is 7. On pav it might not be that much because pav is already cheaper. Okay. So these are product related government interventions. These are 2 government interventions. Do you agree? And these are all these are both counter to each other. This reduces the cost, this increases the cost. These are production related, these are product related. The price which you get here is basic price. The price which you get here is market price. The price which you get here is called as factor cost. Normally, GVA is calculated at basic prices. It is summed up, and these taxes and interventions are adjusted, and then we get GDP at market price. GDP at factor cost is also calculated. Okay? So this we calculate. This we calculate GVA, this we calculate GDP, and this we calculate as GDP. So now one very quick question, very easy question. If I get this GVA at basic prices, this is normally we calculate GVA. You can calculate GDP also at basic prices. There is no hard and fast rule. So if I give you GVA of all sectors at basic prices, and if I give you details of this and this, 10 and 5. Will you be able to calculate backwards? Yes or no? You will be able to calculate. You will just reverse it. You will reduce excise duty and you will add the subsidy. Do you agree? Now we have reduced the subsidy and added the duty. You will reduce it and you will reach here. Then you club all of them together. You will get GDP at factor cost. So from here you can go here. From here you can go here. From here you can go here also. You need this data. No doubt you need these 4 figures. And from here you can go here also. Okay? So all these calculations you can do once you know the logic behind it. So if I ask you what is the difference between factor cost and basic price, your answer should be very crisp answer. In mains also, I have told you, I have given you examples that do not use more words to convey a single idea. Be concise. So what is the conciseness? What do you think is the difference between factor cost and basic prices? Production related interventions by the government. Simple. Production related interventions. Production, because we are comparing these two. What is the difference between basic prices and market price? What will you say? Product related interventions. You can give example GST subsidy. You can give example production tax subsidy on production. Okay? If I ask you a difference between factor cost and market price, government interventions related to product and production. Simple. Both of them. Because from here you go here and then you go here. So both of them come. This was the saga of market price, basic price and factor cost. Did you understand? Completely. See, books don't do justice to these concepts. They give 4 lines and then they expect you to understand this. But this is the main logic behind it. Now sir, why so complicated? Okay? Before that, can you help me fill up this? GDP at factor cost. Okay? For now, plus GDP at factor cost plus dash minus dash is GDP at basic price. Okay? GDP at basic price plus dash minus dash is GDP at market price. This is how it is written actually. नीचे होता है, I have just written GDP at basic price in the bracket, lower this thing, alignment. ठीक है? Help me fill up this. What will come here? What will come here? What will come here? What will come here? Help me fill up this. GDP at factor cost plus what? Plus production taxes, because that adds to your cost, minus what? Production subsidy. You see the words, huh? Production. Okay? Next, what will come here? Product taxes. What will come here? Product subsidies. Do you agree with this? Is it fairly clear? Production and product. This is important. Huh? Product and production. Okay? Now let us simplify this. We have seen the complex. Now we will come back to the simple one. We started at 9:15 ना, हो गया था ना start. ठीक है? This is the main thing. Now let us simplify. Let us eliminate, for our ease of calculation, let us eliminate the intervening this thing layer. We'll just compare factor cost and market price. For our simplicity, let us go one step, come one step out. So can I write this as? Can I write it simply as GDP at, let's say, factor cost plus dash minus dash is GDP at market price. Now I am writing it in a simple manner. So what will I write here? Plus taxes general. I don't know product or production because I am eliminating. So I am just generalizing taxes minus subsidies. Do you agree? ठीक है? Simple. Now the question is, what kind of taxes? Because taxes are two types, direct and indirect. The question which arises and which applies to both, which applies to this also, but we are clubbing it for the purpose of our understanding. So now whatever I'll tell here is applicable to base price also, like the first stage also and the second stage also. So what kind of taxes, direct or indirect? So now I don't want to go into the difference between direct and indirect because that is the subject matter of the tax lecture altogether, and I don't want to confuse you further. So just know one thing, that anything related to product and production is indirect taxes. Just for now, just bear with me, anything related to product or production are indirect taxes. They are not direct taxes. Why they are called indirect, we will discuss later. So I will add a word here, indirect, and this word is applicable to all other previous screens also. Indirect taxes. बराबर है? So simple formula क्या हो गया? I will not even write GDP now. You guys are experts now. Factor cost plus क्या? Indirect taxes, IDT, we write it as IDT, minus subsidies is what? Is market price. Right? So you should be able to calculate backwards, you should be able to calculate forwards also. If you are given market price and if you are asked to go back to factor cost, normally base price, UPSC will not mention base price everywhere. It is an intervening stage, that is why. But it is important for us to know all of this. So if UPSC gives you market price, you should be able to arrive at factor cost. And you know what, UPSC being so unpredictable in the prelims exam, I will not be surprised if it asks you a small sum also in the GS paper. Small sum means they will give you market price, they will give you all these amounts, you just have to add and reduce and you have to arrive at factor cost. They will test your concept in that manner. Instead of writing the formula, instead of giving 4 options ka formula, they will just ask you ki this is the market price, this is the subsidy, and this is the, they will not complicate this. They will ask you very simple. You just have to know what is reduced and what is added. So if you are calculating backwards, bear in mind that you have to add back the subsidies and you have to reduce the indirect taxes. If you are calculating forwards, then add less. But if you are going from here to here, then you have to reduce the signs, na? Because subsidies you have to add back and taxes you have to reduce. Okay? I'll tell you what is the policy implication of this also. This did you understand? Okay? We talked about export minus import in our C plus I plus D. What is the term which we gave to exports minus imports? Net exports. If you remember export minus imports, we gave that equation a term of net exports, because if exports are 100, imports are 20, net exports are 80, and minus also 8. Net exports can be negative also. Similarly, what is the term which we gave to net like income of people in India, and then after reducing income of people who are not from India, what term did we give? Net factor income from abroad. Do you remember this? Similarly, you are adding this, you are reducing this. There is a term for this which is used in common economic parlance, which is net indirect taxes. Consider this as an export minus import, net indirect taxes. That is known as net IDT or net indirect taxes. Some books and some articles will mention taxes, net taxes or something like that, but we know that they mean indirect taxes. Okay? Net indirect taxes, net IDT. So what is net IDT? Plus IDT minus subsidies. Now can net IDT be negative? Yes, it can be negative. When can it be negative? When subsidies are more than indirect taxes. So if this is 50 and subsidies are 75, net indirect taxes is minus 25. Okay, so now see the level of questions which can come. So if you know that if net indirect taxes is negative, is market price greater than factor cost or lesser than factor cost? Now think in this manner. Be very comfortable with numbers now. And this is simple maths. Huh? See, we are doing nothing but adding and subtracting. It means we are not even calculating percentage also. Okay? So if I tell you if net indirect taxes are negative, then will market price be more than factor cost or less than factor cost? What do you think? What do you think? Think and tell. If net indirect taxes are negative, will market price be more than factor cost or less? It will be less than factor cost. Why? Because this is minus 25. So if factor cost is 500 rupees plus minus 25 plus minus, your market price becomes 475. If net indirect taxes are positive, this becomes plus and this becomes 525. Sorry. So market price then becomes more in the second scenario. Okay, easy so far. Very important. All these terms are mentioned everywhere in the newspaper. That is why it is very important for us to know this. Now put on your policy making hats on. Become an officer for a few minutes and tell me why should we analyze, like should we analyze factor cost or should we analyze market price? What should we analyze? Like what should be the basis of our policy making, market price or factor cost? Assuming intervening stage we have skipped for ease of understanding. So people from monetary side, RBI side, monetary policy side, they say that we should analyze market price. Why? Because this is ultimately what consumers pay. Is it not? 200 rupees in our normal exam, 205 rupees is what consumer is paying, the last wala 205. So analyze that. I'm not asking about what should we take into calculating GDP. GDP is calculated at market price only normally, but I'm saying for policy making, if you want to see GDP is increasing or not increasing, if you want to really gauge last year GDP was itna, this year GDP is itna, for policy making purpose, is this a relevant or more important indicator or is this one? That is my question. Now we are thinking economically. I told you after 2 lectures we will go into high gear. We will ride on a super bike. Huh? The things have started now. And in the fiscal policy chapter, so today you will be able to read parts of budget, my guarantee. Today means in this day. I am recording 2 lectures, so might be in the next lecture. I don't know. Okay? 205. So abhi market price या factor cost. So RBI says that ultimately RBI has tried a lot of tricks and had tried a lot of various ways of policy making. RBI has tried, and finally RBI has come at a conclusion recently, 1 or 2 years ago, that ultimately what the customer suffers or what is affecting the final consumer, that should be the basis of policy making. Okay, still again I am not talking about what is counted is market price. For policy making, for analysis, RBI says that government, what does government say? I will analyze this. Try to think why. Government will say, I will not analyze that. I will try to analyze this. Try to think why. And government's logic is very right in this case. But try to think why. This is where I miss live classes, where there are so many people and we get different answers and we try to analyze and we try to brainstorm. See, now in this, when physical classes are not happening or even Zoom classes are not happening, it is a very unidirectional this thing where I talk, I give my reasons, I give the reasons and you understand, okay, huh. But if you have some doubt or you have some new line of thinking, if you would have told now, we would have discussed that. That increases the, sphere of our understanding, or more dimensions are added. But okay, we have our Zoom calls for that. So if you have any idea also which you can discuss, so that is why I suggest people please attend Zoom classes even if you don't have doubts. If you don't have doubts, we can wind up in 15 minutes, but at least we'll speak on some things and then we'll wind up. Also in the next Zoom meeting, let me know whether we can discuss economics, current affairs, articles which appear in the newspaper. Just 2-3 minutes per article we'll discuss. Did you read this? During the week, this had appeared in Indian Express or this had appeared in Hindu. Did you read this? What is the meaning of this? All economic articles only, not other subjects articles. Okay, we can do that also in our Zoom call. So we can use that half an hour, 1 hour more productively rather than just doubt solving session. Okay, barabar hai. Now, I want again think and tell me why government gives more importance to this in policy making than this. I'll give you a hint. Think about what is between the two. Government says, ki sir, this is in my hand. I can increase this anytime. What is the base for analysis? It is this. If government wants to actually gauge the performance of the economy, government will focus on this. See, tomorrow if this is very high, your market price GDP would be so high. Are you getting it? But this is so low. है ना? GDP factor cost 100 rupees. GST on that 250 rupees. 350 rupees is your market price GDP. Oh, India is growing so fast. India is the largest economy in the world. But usme 250 is government induced tax. This is not the production. GDP ka whole point is production. Production is shown by factor cost. How much? And do you agree that factor cost is the income earned by factors also? So the actual metric of development is factor cost. Because this is going to government, which is again indirectly used for poor people and social goals, and also agreed. Subsidies are also going to farmers and all, agreed. That also benefits people, agreed. But what is the basis? What is the base of your production? Factor cost. Factor cost is the most important metric in GDP analysis compared to market price. Simple reason, because the intervening things are under the control of the government. Government can change them anytime. So this government cannot change. Okay, government can affect these anytime it wants. This is policy making. So in order to formulate policies, you need to know on what basis you are formulating your policies. Na? This is the pizza base. Kitna topping dalna hai, how much toppings is to be put in, that depends on how strong your base is, how thick your base is, how more or size may increase your base is, right? And if this is more, government can do away with these also. Indirect tax reduce karega, subsidies bhi reduce karega, because government knows ki it is already very high. Barabar? That is why factor cost. Did you understand this? Okay. See, we are taking 3 lectures for basics only, because once these all things are cleared, see, when I tell you to read part of economic survey, when I'll show you, you will find this word GDP market price. But if you don't know the relevance or meaning of it, what is the use? Okay. Understood? Market price, factor cost, base price. Normally calculation happens GVA level pay at basic prices, then it is then taxes and subsidies are adjusted, and then you get market price, and then you add all of them, and then you get GDP at market price. Samjha? Very simple. Okay, shall we move on to the next this thing? Now, Now tell me, just a simple, like not important thing, but oh hey, I have written that. That is why I feel I should tell you. If I ask you out of this, and out of this, which of the taxes are dependent on volume of production? The right answer is there is only one which is dependent on volume, not volume of production, but volume. Is our production taxes dependent on volume, or are product taxes dependent on volume? What do you think? It can be a mix, but more, what do you think? More, what is dependent on volume? It is that. Why? Because every sale is incurring a GST. This excise duty might be rupees 5 for 100 units. Might be. You don't know. Batches mein production ho raha hai, so you will have to pay excise duty per batch, or in parts and something like that. But this is happening in every bill. This is getting included. So this is linked to volume. Product-based taxes and production-based taxes are not linked to volume. It's very trivial thing. Nobody will ask you on that. But if question comes and then you remember me, then I'll be very happy. हो सकता है UPSC is very unpredictable. It is asking so random things. History तो पूछो ही मत. When I hear the word random, I immediately history comes to my mind. What it is asking. So far, economy has been very predictable and very normal. See, there will be 2 questions out of 10 which are out of the world, but we are talking about those 7-8 questions. So far, economy has been scoring 7 out of 7 in those 10 questions. Normal 7-8 आते हैं. You never know, and that is why we have to prepare all these things. And I told you, once you prepare in a comprehensive manner for mains, for prelims, and for interview. See, in interview question, you might get asked, what do you think is more important, GDP at factor cost at market price? Do you think you'll think there in front of the interview panel? What do you think? You won't even remember what is factor cost. So we need to start analyzing policies from day one, and that is what we try to do here. Okay? I honestly believe in understanding things. See, definition anyone can learn, and we have done that all our life. School, college, वही किया है. अगर वही करके pass होते तो everyone would have been an officer. If you were able to pass an exam like UPSC by doing the same thing which you have been doing since past 15-20 years, then you would have passed easily, no? But that is not the case. There is something else which is demanded by this exam, which is understanding, which is concepts. So nobody will like UPSC will never ask you. ठीक है, simple question में पूछेगा, but UPSC does not expect you to answer GDP minus depreciation is NDP. UPSC will ask what is depreciation, why we are reducing depreciation. That is more important. है ना, मस्त एकदम जर्नी. ये बाकी है. I remember all this. It is remaining. This is remaining. This is our transition slide. This ends our basic chapter and starts our fiscal policy chapter. So ये तो हम last में आएंगे. This I have just made it and kept because basics खत्म होना अभी, a lot of time is there for basics to be over. ठीक है? GDP understood, everything understood. Now we take our story ahead. चलो, very quickly, please, very quickly, help me with this. What do you reduce from GDP to get NDP? Depreciation. So we got NDP. What do you add from GDP to get GNP? Net factor income from abroad. So you got GNP. I'm writing it small because these are known concepts now. You don't need to focus on this. What do you, so how can you arrive at NNP? You can arrive from here also, you can arrive from here also. Because here you will add net factor income, here you will reduce depreciation, you will arrive at NNP. Do you agree with this? Okay? Now we have to find out ki what is the actual. What do you mean by per capita? Do you know the meaning of per capita? Per person. This term na, per capita, it can be anything. Per capita GDP, per capita GNP, per capita income. Everything. Per capita is divided by number of people. So if there are 50 people sitting in this class, and if our combined income is, let's say, 1 lakh rupees, so 1 lakh divided by 50, per capita our income is so much. ठीक है? Per capita हो गया. ये तो very basic. This is per capita means per person, right? Now I'm trying to find out. See, we are doing all the GDP analysis and all of that. This is very fine, good. But ultimately, कितना मिल रहा है? How much is the person earning? That is important. If you earn high, it means your economy is going very good. See, people in developed countries, they earn very high. They spend also very high because things are costlier there, but that means they are developed because their circle of economy has reached another level. Okay, we are developing, we are moving slowly. So I want to know from this analysis, I want to know, see, I told you GDP analysis helps in analyzing the demand, supply, level of production. But what are we analyzing level of production for? Ultimately, what is the base of economics? The base of economics is to help people earn money and buy things at a reasonable price and be financially secure. That is the base of economics. Indian economists want everyone in India to have basic money and to be able to earn money according to their capabilities and ability and willingness, and to not lose money on things like inflation or very high prices, and not so basically economic harmony, you can say financial harmony, financial stability is the ultimate goal. So you do all of this analysis, you demanded a list of everything, you calculated ki itna production is happening, then someone asks ki sir, our GDP is $3 trillion. Oh, very good. But are the people earning $3 trillion? Are the people in India combined, are they earning $3 trillion? Then someone says ki yes, that is how we have calculated. We have taken factor income, okay, and we have taken expenditure method, or we have taken value added method, and that we are calculating. But then you start thinking ki I don't think $2.73 trillion are earned by the people of India. I don't think so. Then everyone asks, why sir? Because we have calculated in that manner. Then you say ki nahi yaar, aisa nahi hai, right? So the very first question is, do you want to know the earnings of people in India, or do you want to know the earnings of people, of Indian people? Which means, do you want to know the earnings of domestic people or national people? So you say, I want to know the earnings of national people, Indians hai. Japanese India mein aake how much is it earning? I have the data, but I don't care. Ultimately, my people, hai na, Indian people, even if they are in Australia, Indian people should be financially secure, whatever they are earning. So I am interested to find out the earnings of people who are Indian, okay, who are national, not domestic, but national. They can be in India, they can be outside India. So then out of these four, which metric do you think can be used as a base for finding out the income of people? Where do you start? Do you start at GDP, NDP, GNP or NNP? So first of all, you eliminate GDP and NDP because they are domestic. We want to know Indians. So now G or N, obviously net, because final kitna earning hai? What is the final earning? You will take. Rest everything is fine. So then you take NNP as your sole, sole criteria. So now if I tell you out of that 2.7, so let's say NNP of Indians, let's say is $5 trillion, for example. Are the people really earning $5 trillion? Might be, because it is NNP first of all. It is not domestic, it is not gross, net hai. Okay? 10 minutes ago, we saw something in the hands of the government, which is not really the earnings of the government. See, NNP is also like GDP only. It is a metric of final goods and services produced. Okay? So if I tell you, if now I am giving you a hint, if I tell you that this is NNP at market price, are people earning NNP at market price? Take the help of this equation. And instead of this, I will write NNP. Chalo, assume this is NNP instead of GDP. Are people earning? Is NNP at market price going into the pockets of people? Yes or no? That is the question which I am asking. If I say NNP at market price is 200 rupees, is that 200 rupees going into the pockets of people? Yes or no? Any people, factor ho, raw material supplier ho, any people. Is 200 going, or is there something in between? These two are government interventions. Do you agree? This 200, which is NNP in our new example, which is NNP at market price, usme se 5 rupees to government is taking away. 5 rupees is not reaching the people. Indirect tax government is taking. And that 200 is a reduced figure because of subsidies. Actually, they are getting more. Why they are getting more? Because wo subsidy is already given to the baker, na? He has got that subsidy of 10 rupees in his pocket, yes or no? Which is not reflected here because you are reducing it. So you have to add back subsidy, you have to reduce the taxes, and then you have to achieve at factor cost. So I agree that to find the actual actual earnings by my citizens or by Indians, I don't care about market price. I care about NNP at factor cost. Yes or no? Because that 200 में से 5 rupees government is taking, it is not going into the pocket. ठीक है, उसमें 10 rupees already government has given that person. So please add that back because it is in his pocket already. So you will say NNP at factor cost represents the people's money. Yes or no? You have reduced indirect taxes from here. बराबर? Indirect taxes have been reduced. है ना? ठीक है? So you take NNP at factor cost. Why? Because this is going in the pockets of people. Market price, if you take market price, बीच में government is standing. Two people from government are standing. Who will divert your money? So this guy will take away money. This guy is giving you money. So who is giving you money? You please add back. Who is taking away money? Please reduce. And then you arrive at factor cost. Basically, I am doing ulta. Market price plus subsidies minus indirect taxes is factor cost. ठीक है? So now you came to know कि okay, my Indians, मेरे प्यारे देशवासियों, my Indians are earning NNP at factor cost. Agreed? Why NNP? Because I want to find Indians. Why net? Because सब खर्चा वर्चा हटा के. And why factor cost? Because market price has two government interventions which do not go to the people, which goes to the or which are in the hands of government. I want to know how much are they actually making, how much are they actually earning. ठीक है? So this is NNP at factor cost, right? And that is why very, very, very important, most important thing whenever we talk about NNP, and that is why out of all these things, see, we had a permutation combination of 1, 2, 3, 4 into 2, 8 things, because GDP at market price, GDP at factor cost, NDP at market price, NDP at factor cost. Out of 8 things, we chose NNP at factor cost. Yes or no? Because this accurately represents the income of Indians, right? So that is why out of all those 8 things, NNP at factor cost is known as national income. That is why NNP at factor cost is national income. Whenever you hear the word national income, it is NNP at factor cost. Please don't make a mistake of writing anything else as national income. One MCQ in almost all classes ka mock test paper is, what is national income? Is it NNP at market price, NNP at factor cost, GDP at market price, GDP at factor cost? These are the 4 options. Every year this question is repeated in the mock test of classes, and UPSC has also asked this question earlier in 2000s or 2004 or 5 something. UPSC has already asked that question. So national income is NNP at factor cost. Why factor cost? Because this is the actual hard work of the people. This is the actual income which is earned by factors. Why net? Because we want final. Why national? Because we are interested in Indians, because this is also national. Okay, national means Indians, whether in India or outside India, we don't care. And product is product. NNP at factor cost is the most important economic identity out of all these 8 things. I am writing it as 8 because ये market price or factor cost, they can be both, ना, market price, factor cost. We are ignoring basic prices because they are just transitionary. Unless sale happens, you cannot count it in your this thing final इसमें. तो इसीलिए we know the concept, but it is okay. समझा? National income is NNP at factor cost. Why? Because of this. चलो. Now we move our car ahead. See, this is a little bit boring because these are concepts which we cannot imagine, but budget we can imagine. Or if I say ki 2000 crores are given for construction of bridge, that you can immediately imagine, right? That will come in banking chapter, though it will be a lot of fun. In banking chapter, I will take you to accounts, because if you understand accounts, then only you will understand banking. Otherwise, there is no sense in reading. We'll do that. 6 lectures down the line, maybe banking will 6 to 8 lectures, 6-7 lectures के बाद banking will start. ठीक है? So where were we? National income है ना? National income is NNP at what? Factor cost. चलो, ये भी आ गया. Done? How to arrive at NNP from GDP? Tell me. What is the first step to arrive? तो पहले तो arrive at NNP first of all. If I give you GDP at market price, will you be able to arrive at NNP at factor cost? Will you able to do this journey? Will you able? Yes or no? क्या करोगे? फर्स्ट ऑफ ऑल व्हाट यू विल डू, जीडीपी एट मार्केट प्राइस को यू विल कन्वर्ट टू एनएनपी. What, how will you convert it to NNP? One, you will reduce depreciation. ठीक है. Second, you will add net factor income from abroad. Am I right? You will get NNP. ठीक है. Once you get NNP, that is still NNP at market price. Bear in mind that is still NNP at market price. After you have NNP at market price, what you will do? What you will do? What will you add? What will you reduce? You will add back indirect taxes. Market price से उल्टा we are going. You will add back indirect taxes and you will reduce subsidies, and then you arrive at NNP at factor cost. ठीक है? You know, in our CA, CA Inter, CA I think Foundation or CA Inter, the first stage or the second stage somewhere, we get sums on this. We get this and we have to arrive at this, we get this, we have to arrive at this, and it is not easy because we get 10 components. So in depreciation there are 10 things. So which to take, which not to take, that we do. But ultimately I did not do all of this because this is in new CA syllabus and I am from old CA syllabus. So we did not have all of this, but now they have introduced this. I feel it is very good because this needs to be learnt. But yes, it all depends on how you are learning it. If you just by heart the formulas, then please do not attempt it. Unless you know the logic, please do not go for by hearting. So don't remember, acha, minus indirect taxes plus subsidies. Oh, plus indirect taxes minus subsidies. If you do that, you will do that in the exam also and you will get confused because all options will be like that only, confusing. Please think, see this lecture again if you want, but please feed this in your mind ki this is the reason, this is the logic, this is the understanding. ठीक है? चलो, done. Now I came to know कि मेरे प्यारे देशवासियों का what is the income of all my Indians. ठीक है? Now I want to know what is the income of every one of them. Do you think if I divide this by number of people, I'll get the per capita national income? Now you see, you are sitting in your office, you impressed your juniors by saying कि अरे हाँ sir, we agree कि NNP at factor cost is the most accurate representation of national income. ठीक है? You are like fine. Then you see outside your office that there are a lot of protests happening. People are coming and people are saying कि महंगाई है, our incomes are not earning, we are not able to spend, we are not able to save, our incomes are very low, but NNP is very high. You see NNP per capita is very high, but people are still protesting. ठीक है? Why is this? This is because even though this is earned by the people, equal amount cannot be spent by the people. You earn 1 lakh rupees, but you cannot spend 1 lakh rupees. Do you agree with this statement? You earn 1 lakh rupees, you cannot spend, or you cannot save. I am not talking about saving and spending. You earn 1 lakh, but you don't have rights over that 1 lakh. That is what I am trying to say. ठीक है? You earn 1 lakh, but sometimes you are able to spend more than 1 lakh. Sir, what are you talking about? Take an example. You are earning. तो चलो, ये हमने, what we did was, now we took per capita NNP. So per capita we got something, per capita NNP. Now you saw that now one person comes and you saw that he is spending or saving more than what he is earning. So you ask him, how are you doing this? Because NNP per capita, let's say per capita NNP is 100 rupees. He is saving 105 rupees or he is spending 105 rupees. You ask him, how? He says, sir, you only gave me scholarship. Will he be able to spend more? Yes, more than he is earning. He is earning 100. You gave him 5 rupees scholarship. He is spending more. 5 rupees on education he is spending. Na, scholarship hai. Okay, you transferred in his bank account, paid to the, or you paid directly to the institution in which he is admitted for the course, but that is his spending. So what you do is, if I want to find the total spending power of the people, I will have to take per capita NNP at factor cost. Then first is what I will have to do is, I will have to add transfer payments. You remember transfer payments? Chalo, retired people get pension. Okay? That is also given by the government. Are they earning pension? No, they are not working for the pension, but they are spending more than, so suppose they are earning from some other sources, they are retired, they have some other business, they are earning 1 lakh rupees from the business. Pension they are getting 50,000 rupees, they are able to spend 50,000, more than what they earn pension. So we have one word for that called as transfer payment. So what you will do is you will add, please don't remember this as formula, please understand all these things. You don't have to remember this as a formula. You will add transfer payments, yes or no? Okay, you will add transfer payments. Next what you do? You notice that either you as a government, you notice that either you have given him some loan or he has given you some loan. As a government, you invest and all. How is that a loan and all? In markets chapter we'll discuss. So when he borrows some amount, let's say he takes a loan of 1 lakh rupees, he has to pay interest on that. Okay? Does that interest reduce his spending power? Yes, because if you take a home loan, okay, your spending power is reduced. We are finding spending power, because your amount salary is blocked in EMI only. Okay? So what you do is you less interest payments. Bear in mind, you less interest payments or you add interest payments depending. If you have given a loan to him, then he will pay you interest. If you or anyone has taken loan from him, then he will get interest. See, he is not working for that interest. He has just given a loan and he is sitting at home and he is earning, which means he is earning 50,000 salary. He has given loan to someone and he is getting 1,000 interest also. So he is able to spend more than what he is earning. So you will add or less interest payments depending on who has given. Okay? See, you should not remember all this, but it is very important to know the terms which I am about to tell you. Okay? Which I am about to tell you. वो ज़्यादा that is more important. ठीक है? Then हाँ यही तो है. Then you have then suppose you have invested. You are a factor, you are a earner. Suppose you have invested some money in a company and that company is giving your salary. Okay? So you are earning and all of that. That company is also taxed on its income. That company earns 100 rupees and it gives the money to you, but it will not give you 100 rupees. It will give you 90 rupees. Why? Because company has to pay tax on its income. Remember, income tax नाम की भी चीज है. There is something called as income tax also. We have reduced indirect taxes. Bear in mind, in NNP factor cost, we have reduced indirect taxes. Have we reduced direct taxes? We have not reduced direct taxes. Direct taxes तो बाद में आते. Direct taxes come after you earn, after you have your income. So when you are calculating this, you as a government officer, you are embarrassed कि some things so you are only taking away from the consumer. ठीक है? So now for the purpose of our understanding, we will now reduce. I want to say income tax, but I would use a very sophisticated word at this stage. I would reduce corporate tax. Why corporate tax? Because the company is being taxed. The company's income is being taxed. Your employer's income is being taxed. See, you are getting a salary of 50,000 rupees, but if corporate tax wouldn't have been there, you would have got a salary of 55,000 rupees but your employer is getting taxed. That is why he is cutting that tax and he is giving you the amount. Bear in mind, this is not your tax. This is a tax of the company. If you find difficulty in understanding this, you will understand this in tax chapter. But just wait for a while. You reduce corporate tax, or this is also called as undistributed income. Your employer has given tax to the government and you cannot then get. So tomorrow if your employer is not taxed, he will pass on the extra money to you, or amongst all the employees, not you personally. Okay? So once you do all this, you find out कि हाँ, इसके बाद whatever comes, जितना भी rupees come, that is his personal income. This was national income, per capita national income. Nation का पैसा this was. But then you also did only in transfer payments, in giving transfer payments, in interest payments and corporate taxes and all of that. That also affected his personal purchasing power, spending power, yes or no? So this is known as, this was NNP, this is national income. So this will give you per capita national income. Okay? This is national income. This will give you personal income. This will give you personal income, PI. This is his personal income. ये तो सारे संसार का है, national income है, but something very specific to him we are calculating, we are adding and reducing. This is personal income. It's okay if you understand thoda thoda, because when you read the book you will understand more. Personal income. ठीक है? Personal income आ गया. He got his salary, he got his salary, he got his scholarship, he paid interest or he received interest, he got everything. ठीक है? Now that person says कि ठीक है, personal income is there. Still people are protesting. Still people are protesting. इसके आगे क्या हो सकता है? What can be more than this? So then again you as a government officer, you are doubly embarrassed, because here you taxed his employer and now you are taxing him personally, which is known as income tax. Tax on his income. So I would take personal income, and then in order to find his true spending power, कितना है हाथ में, which he can spend discretionarily, we reduce income taxes. Do you agree with this? This was tax on his employer, which reduced his income. This is tax on his own income. Sir, is it not double taxes? Please meet me in tax chapter. You will reduce his income, because see, so many reductions are happening now. Okay? Chalo. Very funny thing. And we are counting government interventions only. If you notice, what he does in his own life is his problem. We are counting government intervention. Just remember, from NNP in market price, you came to factor cost because there were government interventions. From NNP at factor cost per capita, you are coming to personal income because there are government interventions, because government is doing all this. From personal income, we are going somewhere because there are government interventions. We want to remove all government's activity and we want to know कि how much is he getting actually. ठीक है? तो ये सारे government interventions है, we are taking the effect of them, and we are removing and we are studying them. ठीक है? Personal income हो गया, income tax हमने हटा दिया, right? That is one. Secondly, he is driving without a mask. He goes on the road, he drives he just earned his salary, he paid his income tax or take, and he is driving without a mask, and then one police wala stops him and then he says ki, sir, please give me 1,000 rupees. Then you say ki, sir, 200, sir, please, sir. Then we settle at 400. That's a different story. ठीक है? But income tax gaya. Is that police officer also a government employee? Is he collecting fine? Is he reducing your income? Yes. You don't want to willingly spend on that fine, right? This is not willful expenditure. So you will reduce fines. Okay? This is an example I gave. This is an example. Overall, non-tax expense bolte hai isko. Non-tax. It is not a tax in the traditional sense, but it is a non-tax expense. So you reduce that and you say कि finally उसके हाथ में कितना है, which he can उड़ाओ. So finally what is remaining in his hand, finally whatever is remaining in his hand is called as ये तो है ही, personal income तो है ही. So we will write personal income here. This is his personal income. Now we have, and from nation we have come to his personal domain here. Now in personal domain we are trying to find out how much can he actually spend. So here we give this income a name of disposable personal income. Disposable personal income, also known as DPI. So from NI we went to PI, from PI we went to DPI. Disposable, he can dispose it anyhow he wants. He can buy drugs, he can buy weapons, he can go to Mirzapur, anything he can do. Disposable personal income. Did you understand this? This is a big saga of things we are doing today, and trust me, this is basics. When I tell you this is basics, so when you read editorials on taxation, you will find words like it reduces his disposable personal income. What they mean is if you increase this, it reduces this. Simple. It's very simple. The only thing is understanding is required. Disposable personal income. Oh, DPI. We started from NI. How did we come to NI? NNPFC. How did it come to NNPFC? From GDP MP. We yesterday studied what is GDP. Okay? Then today we went one step further on what is GDP MP. Then we went to NNP. Then we went to fixed factor cost. Then we came to NI. Then we are coming to PI, and then we are coming to DPI. This is the analysis economists do. At every stage they measure कि कहाँ problem है. Why is this not increasing? See, the complaint of every you and me, what is our complaint? Salary is very less, we are earning very less. Even if you earn 50 lakhs, you will think it is very less, right? So, government says कि what can we do to improve the situation? So, can we reduce this? Can we reduce this? Can we make some changes in this? Can we इसके भी पहले make some changes in this? Can we make some changes in this? This? All these are government interventions. This is policy making, and that see books or whatever material you read, they finish the GDP by introducing GDP, giving the definitions and finished. But what is the policy implication of this? You need to understand, right? So each and every branch is a separate study. So even transfer payments are studied. How much scholarship to give? What do you think? Government is giving you 50,000 scholarship. Is it a random amount? It is all calculated depending on NNP, GDP, GNP. And hence GDP analysis or the study of GDP becomes so very important. Samjha? Understood? Easy, very easy. It's very easy actually. Once you understand, things become very easy. Now, again, let me give you an example. What is last year 2020? This year 2020. Okay? Last year you produced 10 cakes. 10 cakes. 10 cakes. We are calculating GDP now. Very simple. Market price hai, factor cost hai. Just ignore that for now. We want simple things now, sir. काफी complicated already हो गया है. So 2020 में 10 cakes we sold at how much was the price? 205. In our new example, price was 205. So let us say, what is the GDP? If I tell you what is the GDP at market price, it is 2050. Yes or no? It is 2050. Simple. This is the GDP. In 2021, if I tell you, this has increased to 4,100. What I am doing is I am simply doubling this into 2 कर रहा हूँ मैं. But if I tell you that in 2021 GDP final into this has increased to 4,100. ठीक है? Do you think GDP has definitely increased, no doubt. Market price GDP has increased. Do you think 20 cakes were produced? I am asking you. 10 cakes into 2050. Next year's data you have 4,100. Do you think 20 cakes were produced or 10 cakes were produced, or what happened? What do you think? What happened? What happened? You cannot say. Why you cannot say? Because this can be same amount of cakes into double the price. ठीक है? Double the amount of cakes into half the price. समझ में आ रहा है आपको? ठीक है? Not half the price, same price, double the amount of cakes. Do you understand what I am saying? Either this can double or this can double, or both of them can somehow contribute. This will go up by certain percentage, this will also go up, then it will result in 4,100. This will triple, this will actually reduce, then also it will reach 4,100. You don't know. ठीक है? This is the price, huh? And this is the quantity. You don't know. Now what do you think is more beneficial? This increasing or this increasing? See, both increasing is very good. GDP is increasing. What do you think is more increasing? This more beneficial? This increasing or this increasing? It is quantity, because that is what factors are earning. If you are producing double, see, now just for 2 minutes, be a supplier, be a producer. If today you are producing 10 cakes, tomorrow you get an order of 20 cakes, you will employ more people. Employment generated. You will, for employing people, you might have to pay them salaries to attract them to your job. You will, salaries will increase, wages will increase. You will have to buy new machine, new oven for baking 20 cakes. Investment happens. Capital goods are bought. समझ रहे हो? This benefits a lot to the economy overall. And if obviously if income increases, if your wages increase, if your employment increase, who does not want that in an economy? Come to price. Is price increase beneficial? Yes, of course it is. This, see, if you tell him produce 20 cakes but at 50 rupees, will he produce? He will say, why would I? I will not employ, I will not buy machinery, I will not increase wages, I will not even work, I will leave my job and I will start something else. Correct? This will induce him to do this. Okay? Right? This would encourage him. Remember the first lecture, demand supply. If the price are increasing, they are more than willing to, supply. If the price is very less, they will not supply. Matlab they will say ki nahi, tomorrow I will find some other customer. Hai, you try to sell something on OLX, you will come to know. You have to set the price which is very good also and not very bad for you also. Barabar? Okay? So from supplier side, both of these are very good. Come to buyer side. Is this good from buyer side? Price increasing. Is the increase in price good for buyer side? No, it is not. Tomorrow you will get this at double price. You will not buy. Is reducing price good for buyer? Yes, you will get it in sasta price. So now this is a point of conflict. If this increasing good for buyer? Yes, more variety, more quantity available, more supply available. Sony PS5 not available anywhere. If they double the supply, they will get. So buyer, so this is not a question at all. This is supplier is happy, buyer is happy. This is a point of contention. Buyer wants it to come down, supplier wants it to go up. Okay, so this is mixed. This is like golgappa, meetha pani and tikha pani. This is mixed, and this is definitely a cake. Sweet hi theek hai. Spicy cakes are not good. There are some places which give spicy cakes, but Shira bolte in India. In Indian terms, we call them Shira. Spicy. It is nothing but semolina and spices. Okay. Sweet Shira is also there, but we have spicy Shira also. We call them different names. Most common is Upma. In western part of India, we call them Upma. Then Upit, there is another word. Pure Marathi word is Upit, Brahmanical word. But I don't know whether it is there in other parts or not. I don't know. In Delhi, do we get Upma and all? I don't know. It is nothing but Shira, but instead of sugar, they put masala and chilies. Meet me sometime, we'll eat. Okay? So this is not a problem at all. Everyone wants this to increase because if buyers find more variety, more quantity, very good. Sellers are more induced. This is a point of contention. So our focus is to increase this. Okay? Because this has a lot of side effects also, positive side effects. Investment increasing, everything is increasing. Okay? Now 205, we should keep it at a sweet spot. It should increase. See, because if seller is selling today at 205, tomorrow he might not be willing. Tomorrow he will say ki, what is my incentive if I am earning the same money? Just imagine if you are earning 50,000 per month for 10 years, you will not work. Every year you expect some salary increase, you will expect increment, you will expect bonus. So this has to increase, but not so much. So now we don't know कि इसमें क्या है. So this has to increase, but not so much. This has to definitely increase. बराबर है? Now tell me, if I want to find out economy ka performance, if I want to open the bonnet of the economy, and if I want to see how the engines are working of the economy, how the machineries are working, should I focus on this or should I focus on this? If I want to know at which level economy is performing, should I focus on this or this? Just tell me. I should focus on this. This is the physical process. This can be increased. Government can intervene hundreds of ways, and government can ask RBI to intervene in hundreds of ways. This can increase. Increasing this is so difficult. Why? Because you have to induce suppliers to produce more. For that, you should create demand more. For that, you should reduce price. But to induce suppliers to produce more, you should increase price. So this is very complicated. But if you are able to do this 10 to 15, let's say, if you are able to do this, it's a big thing. Okay? Now remember C plus I plus D plus X minus M. Don't worry, we are not nearing the end of the chapter. Like I told you, this is. So which entity do you think we need to focus on for increasing the production? Is it I? Yes. Design. This is machinery. Imagine instead of 100 machines, 500 machines are being purchased, which means your economy is gearing up for more production. There is a risk of oversupply. There is a risk of prices crashing. But at the same time, no supplier is stupid enough to invest in a new machinery unless he is ensured of demand. Are you getting it? This is Say's law. It is theoretical economics. J.B. Say's was an economist. He said this. No one is stupid enough. So if a supplier knows that the demand for cakes, high increase in cakes is only temporary. It is wedding season. So he will hire temporary workers only. He will not create permanent employment. Correct? But if he knows that no, people have the money and people are now interested in cheesecake and new types of cakes are coming and people, then they are in demand. he will definitely purchase a new machinery, he will definitely keep people permanent basis, and that will impact the economy. See, we took an example of cake. Just think about the employee who works in the bakery. He has a family. Okay? If he is earning high today, he will be able to provide better education to his children. He will take insurance. He will he will invest in stocks if he is earning. Are you seeing the effects which are spreading to the economy? If his children are educated, they will become officers tomorrow. Then his family will reach the next level. So by one baker investing in a new machinery, paying high salaries to that person, so many people are benefited by one person. And now imagine we are a population of kitna 138 crores now. 135, 138 crores we have crossed already. 21 census will happen now next year maybe. So we'll come to know the figures. This is very unfortunate. Now we are reading figures of 10 years ago now because census has not happened. But okay. Right? So this, now we took a very small example of bakery. Hai na? Imagine the same thing happening in digital literacy or digital education. So many people are impacted from this. Imagine we keep all these lectures on YouTube. Okay? Not considering the financial thing. So many students will benefit. So many things will happen. So keep this word in mind, that any positive economic intervention, this is positive, any positive economic intervention has a positive multiplier effect. Sir, very complex. The term is complex, but it is a multiplier, because that one baker who has purchased a new machinery, he doesn't know how he is benefiting his children, employees of his children. Hai na? They are getting new phones. His employees' children are getting new phones. By getting new phones, they are learning new technology. They learn to code. They become expert coders. They work at Google, and they get married off in high status families, right? So why? He took one new machine and he put 4 new workers and he raised their wages. Multiplier effect. Now multiplier can be negative also. So when you buy a new machinery to produce cigarettes, what will happen to the health of the population? No, more cigarettes, more smoking, health will deteriorate. That is a negative multiplier effect. But this is multiplier effect, which means 1 rupee invested does not result in 1 rupee benefit. It results in more benefit. Multiplier effect. Are you getting it? Governments announcing construction of a new bridge. Hundreds of people get employed. Hundreds of cement manufacturers get incentive to produce more. They invest in new machineries. Hundreds of architects are employed. One bridge, hundreds of benefits. Multiplier effect. There are some sectors which have a huge multiplier effect. There are some sectors which have a small multiplier effect. So the sector which involves a lot of people, which affects a lot of other sectors which are interconnected. So for example, technology. If you benefit technology, you will benefit everyone. Tomorrow, if these cameras, these fancy TVs are available at a cheaper price, everyone will benefit. We will be able to reduce our fees. Then more students will be able to come and they will become officers. Are you getting the multiplier effect? So many benefits. Multiplier. So this is of paramount importance. All of them are important. This is of paramount importance. Okay? What are these goods known as? Consumer goods or capital goods? Capital goods. These are known as capital goods. The goods in which you invest are known as capital goods. You will see the first lecture, you will understand. Okay? These are known as capital goods. Okay? So when I say that capital is increasing, investment in capital is increasing, can I say that I can expect a positive multiplier effect? Yes. Now we are looking at overall economy. Okay? And capital, like I told you, capital can be both hard and soft capital. Infrastructure can be hard and soft. Soft means knowledge, skills and all of that. In economics, we deal normally with hard capital, hard infrastructure, which can be seen, which can rough and tough capital, you can say. So, can I say that investing in capital goods help increase my capital formation? है ना? Capital formation बोल सकते हैं ना? I can, in English, capital. If I say capital is forming, what do we mean by that? Capital is forming. We mean that investment is happening. This is increasing. Okay? And like I said, this is a capital which is fixed. The machineries are fixed. They are hard capital. They don't go anywhere. Okay? So that is why I call this as fixed capital formation. This is an economic term. This is a pure economic term. This is not even an English term. But do you understand what is the fixed capital? Nothing but increase in I. Okay? Now, if you don't reduce depreciation, what is it called? G or N? If you don't reduce depreciation, what would I write? G or N? Gross fixed capital formation. This is a high level term which trust me, those who have given UPSC even 2-3 times, they will not know this term, they will not know the meaning of this term. If you don't know the meaning of this term, sir, but if UPSC does not ask, then why to know? To use in answers, to use in mains, sir. Somebody writes ki increase in investment expenditure, you write increase in gross fixed capital formation with bracket, examiner impressed, he starts crying, he gives you full marks there. This is the power of words, keywords. If you write, and in one line you write increase in gross fixed capital formation required, finished, khatam, bye bye, goodbye. That is the importance. Okay, gross fixed capital formation. I'll erase it and I'll write it thoda chota karke. Okay, because we need this for our transition. I am keeping this space reserved. I want to draw a nice diagram here. Gross fixed capital formation samjha. Where were we? Where did this story start? This story started here. Okay? No, we can extend it. This story starts here. Okay? Are you getting bored? Nahi na? So we want to increase quantity, which means we want to increase gross fixed capital formation. Can I say now? We want to increase quantity, which means we want to increase gross fixed capital formation. Fancy words, meaning is this. Okay? Our price we want to increase thoda, but not jada. Thoda sa price we want to increase. Now, if I focus on this, if I fix on gross fixed capital formation, so now if I tell you in this data, if I tell you कि the price has remained the same, but ये 20 हो गया, you will be happy because your gross fixed capital formation is increasing. So as a metric for analysis of, for comparison whether you have increased or not, for comparison year on year, quarter on quarter, month on month, week on week, country by country, if you want to compare whether actually your GDP engine is running or not, you focus on quantity. Price तो ऊपर नीचे होते रहता है, you know, price keeps on changing, but you focus then on quantity. ठीक है, बराबर है. Now चलो, common sense. When price increases, what happens? What is that one word which we all know, which is currently in news, which is at an all-time high? Inflation. ठीक है. What is inflation? Just imagine blowing air in a balloon. English है, you inflate a balloon, right? You inflate a tire, right? You fill air in the tire. The same thing. You take GDP and you blow air in the GDP, it increases. It is inflation. Normal English word. ठीक है? But it is just air. Trust me, it is just air. It is nothing of substance. You know, there are no goods in it. It is just air. So this 205 feet increased to 210. Can we say there is inflation? Yes. Inflation might be very small. 1 rupee inflation से लेके 1000 rupee inflation. Normally we do inflation in percentage terms. All about inflation, we have 1 or 2 sessions for that. We'll discuss types of inflation. We'll discuss how to control them. Okay, and we do it immediately after RBI chapter because RBI is the inflation targeting authority in India. So I try to fit in inflation between RBI chapter and banking chapter so that there is a complete linkage. So, but now we are, and we'll, trust me when I say this, in banking chapter, I will come to this. In inflation chapter, I will come to this. Everything is interlinked. So if this was dedicated to me, I would have saved all these pages together and we would have made a whole this thing only. Pura diagram say we would have studied everything. But okay, we'll save all this. So to actually analyze GDP, we focus on quantity. Okay, chalo. Can I say if this increases to 215, this increases to 215, can I say increase of 10 quantity is real? ये असली increase है, this is real, plus 10. Can I say increase of 15 is hawa? Can I say increase of 15 is air? Yes, because this is just price increase. Actually production is not increased. Okay, it is just price increase, right? This is air, this is real. Okay, and the difference is what? Ki it is inflation. This is due to inflation. So now come here. From this to this, Real has also increased, inflation has also increased. Let us assume कि price also increases, quantity also increases. Real also increased, price also increased. ठीक है? Now let us simplify this example. कि we had 10, we had 205 and we had 2050. ठीक है? Case 1. Case 2, we have 10, we have 300 and we have 3000. ठीक है? Case 3, we have 20, we have 300, we have 6000. Case 4, we have 20, we have 350, sorry, not 350. We have 205 and we have 4100. ठीक है? अभी first, this is the base scenario. This is the base. Do you agree this is the base? Because we are comparing everything to this. This is the base. Next year what happened? Next year comparing this remained same, this increased. So which means we have 95 rupees inflation. ठीक है? So in percentage terms, I hope you know how to remove percentage. You will take 300 minus 205 divided by the base, divided by 205. ठीक है? So 95 divided by 205, उतना percentage you have there is inflation. Simple, take an example of 2 tests which you solve, 2 mock tests. In the first test you score 95 marks, in the second test you score 140 marks. So by what percentage your marks have increased? 140 minus 95 divided by 95 is the answer. So I am not teaching you basic maths, please, it is expected you know it. ठीक है? हाँ, so I can say there is an inflation here. So let me write it in red. There is an inflation here, but there is no real change here. Do you agree with this? ठीक है? Now don't go from 2 to 3. Base is 1, so we compare everything with 1 only. This is alternate scenario, right? Now compare 1 and 4 for now. 1 and 4. Inflation नहीं हुआ है. Inflation is not there. Real has increased definitely. ठीक है? Now compare 1 and 3. Both have happened. Real is increased. Inflation is increased. ठीक है? This is all GDP. So GDP of year 1, or you can say base year is year 0. GDP today is 2050. Tomorrow if it becomes this, you don't know unless you look inside what is happening, right? This is the final figure. ठीक है? Very, very, very easy. This is final. ठीक है? Now if I tell you, what is the opposite of inflation? Deflation. Deflate means what? To deflate a car tire, to deflate a balloon, which means to pull out the air from something. So where inflation has happened? Inflation has happened here and where? 1, 2, एक ही जगह हुआ है क्या? This ना? हाँ. Inflation has happened here and here. ठीक है? Just forget about this now because this is real. Only real has increased. Inflation has happened. You tell me, if you want to pull air out of this, what will be the GDP? If I ask you to pull air out of these 2 scenarios, pull the air, deflate these figures, how would you do it? You would take 205 only here and you would take 205 only here. Are you agreeing? So this will remain 2050 only because it is 10 only, and this would become 4100. You are deflating. Are these deflated figures? Yes. So do they show? See, in this case nothing has changed. In this case real has changed. Okay? So you have deflated this. So you have pulled the air out of this. So where is the asli mal? Where is the real substance? In these. Okay? So the GDP which is arrived at, remember this, now we are going to the term, the GDP which is arrived at without inflation, not considering inflation. What did you do to deflate it? You took base figure only, 205 ही रहेगा. Everywhere it will be 205. This is removing the impact of inflation, right? You multiplied it by same price. No price change. You are assuming no price change. So now you have removed the air, you have deflated it, and this is the asli mal. This is the real stuff. Okay? That is why the GDP which does not have an effect of price change, the GDP which does not have an effect of price change, now price change is good or bad, secondary thing, is known as real GDP. Asli mal, real GDP. Actually, you should not write it in brackets. Is called as real GDP. Real है, असली है, real GDP, GDP in real terms. and this real is used everywhere. Interest rate in real terms. Real means without considering the effect of inflation. Real means without considering the effect of inflation. Sir, again, real means without considering the effect of inflation. Only quantity increased, only capital formation increased, only production increased, nothing else increased, no price increase. Focus is on no price increase. No price increase. Okay? No price increase. That is real terms. Okay? Now, ultimately again, coming to RBI's view, what the consumer pays finally? This. Consumer is not concerned with real. You as a policy maker, you are concerned with real, you are focused. What is the consumer paying? This. Yes or no? He is paying the impact of quantity also, and he is paying the impact of price also. Okay? But for policy making terms, real. This is paid by ultimate consumer. So this is very, for our policy purposes, it is not relevant. This for our policy purposes, because we want to understand the effect of, we want to focus on that. So that is why in policy or in economic terms, we call this as nominal. It is very nominal, not in amount, but this GDP is called as nominal GDP. And real GDP. Nominal GDP. So if I ask you what is the nominal GDP in scenario 3, what will you say? 6,000. If I ask you what is the real GDP in scenario 3, 4,100. Scenario 3 only, yeah? Real GDP nominal. What will come in between here? If I have to arrive, so if I give you these figures, okay, if I give you these figures, or let's say इसमें तो real भी है ना, इसमें real नहीं है. If I give you these figures, second scenario में, if I give you 3,000 and if I ask you to calculate, this is real. If I ask you to calculate, sorry, this is nominal. If I ask you to calculate real, what will you do? You will reduce inflation. Okay? So can I say this? Real plus the effect of inflation is nominal. Nominal is pura, total. Real is asli mal plus your air is nominal. Real stuff plus air is nominal. Okay? Good students in a class plus bad students in a class is total strength of the class. Simple, easy to understand. So if I ask you to calculate from nominal to real, what will you do? You will just subtract inflation. Ulta hai na, subtract. From nominal to real you will reduce. From real to nominal you will add. Real, nominal, inflation. Okay? Now this was subtracting and adding was very easy. So we take nominal GDP 500 rupees. Okay? We take real GDP 250 rupees. Right? 250 is the inflation, assuming no real change. One more important term we left out here. This was the first scenario. This is the base with which we compared 2 also, 3 also, 4 also. This year is called as the base year. This is an economic term. This year is called as the base year. I'll explain a related term here only. It is a bit advanced. Chalo, consider an example. Take an example. You take normally 1 hour to travel from point A to point B. You ride on a Activa. You take 1 hour to travel from point A to point B. Chalo, theek hai, very good. Normally you take 1 hour. Tomorrow there was traffic and you took 1.5 hours. ठीक है? How much did you take tomorrow? 1.5 hours. Late हो गया. Day after tomorrow, you reached in 1 hour 10 minutes. Did you reach early or did you reach late? Normally you take 1 hour. Tomorrow you took 1.5 hours. Day after tomorrow you took 1 hour 10 minutes. Now answer, did you take early or did you reach early or did you reach later? What do you think? Sir, you will say ki sir, compared to what? Compared to the first day I reached late, compared to the second day I reached early. So which is your base? If you take the base as day 1, then you are reaching late, 10 minutes late. If you are reaching the base as day 2, then you are reaching 20 minutes early. बराबर है? This is the base year. Okay, base day, whatever base you are taking, you are comparing it with the base. Now, let us take this to extreme cases, extreme examples. You solved first MCQ test of your life, full length MCQ, 200 marks ka 100 questions you solved. You got 60 marks out of 200. First test 60, 70 is expected because we don't know a lot of things. 60 marks you got. ठीक है? Second test you solved, and second test mein you scored 90 marks. How much did you improve? 30 marks se you and in percentage terms 30 upon 60, 50% marks is increased. Do you agree? You scored 60 marks, uska half you increased in the second test, 30 added and 90 you got. Okay, so your score improved between test 1 and test 2 by 50%. Okay, but will you be happy with that performance? If you tell someone that I increased my performance by 50%, he will be like, oh, very great. But is that 90 good? Not that good. Decent, matlab you will not be happy with that performance, right? Why is this increase so looking, it is not drastic, but why is it looking so drastic? Tell me, can you tell me why is it looking so drastic? Why are we talking about 50%? ऐसा क्या है? In the maths equation, why is the change looking so drastic? Because the 60 was very less pehle. If instead of 60, it would have been 100 and you improved your score by 30 marks, then only 30% increase hota tha. What I am telling is कि first test 60 marks, first test 60 marks, ठीक है? Done. Second test 90 marks. Difference 30 marks. Percentage terms 30. Percentage terms 30 upon 60, 50%. 50% increase. Very good, beta. ठीक है? Let's say you become an expert. 10th test, you score 150. How much was the improvement? 30 marks. Again, in between 10th and 11th test, you improved by 30 marks. So you scored 180 basically. So 30 marks you added. In the next test, you scored 180. Someone asks you, in the first test, you had improved by 50 percentage terms. 30 marks, but 50 percentage. Now, how much did you improve? You say 30 marks only, but percentage, will it reduce or increase? It will reduce. Why? Because now you are dividing 30 by 150. This is your base, na? Earlier, your base was very small, and hence the change was significant. Now your base is only your base is 150. So ये कितना है? Is it only 20%? This is 1/5. ठीक है? So if you compare in percentage terms, my score increased by 50%, my score increased by 20%. The increase is same, 30 marks, 30 marks. But only because of the base, my percentage is looking small here and looking big here. We don't know whether it is small or big. We know that it is looking small because of this. We know that it is looking big because of this. Okay? This is a little bit advanced concept, but I am telling you now because it is related. Okay? Are you understanding this? So, इसमें blame किसका है? Who is to be blamed? Base is to be blamed. What are you basing your calculations on? ठीक है? Base is to be blamed, right? Normally you take 1 hour, but assume that 1 hour is also very high. So your base is defective. ठीक है? Seemingly high or seemingly low, like seemingly high or seemingly low percentages, improvements or क्या बोलते हैं? Or negative improvements, you can say. Seemingly high or low percentage of change due to bases being abnormally high or abnormally low. Here the base is abnormally low, here the base is abnormally high, 150 marks. Oh, okay? Resultant percentages being very drastic due to abnormally high or abnormally low bases is called as base effect. Is called as base effect. I will, in front of you, I can Google search base effect, and in the news tab I will click and you will find 5 articles in recent last week which have mentioned the word base effect. Base effect. Your base is defective. Very live example I'll give. Our GDP contracted by 23.9% in the first quarter of 2020. 24%. ठीक है? अभी उसके ऊपर if you improve even little bit, it will show a drastic improvement. ठीक है? See, your GDP graph was like this earlier. Then you go here. ठीक है? This is your base 0% line. No growth. You were growing. Then you went here because of pandemic. Now even if you grow this much now, it is 0 plus 1 only. But compared to the base, which is abnormally low, oh, so much you are. 23.9%, so you covered only. Plus 1%, 25% GDP growth. Base effect. Do you get it? You can invert this chart also. If grows abnormally high and then it falls low, ठीक है? Base effect. Inflation is high because of, one part of it is because of base effect. GDP growth we are estimating 14%, 12% because of base effect. ठीक है? Base effect is a very important term which is in news these days, so please do not ignore base effect. Base effect. Okay, it is base effect. Right? हाँ. So coming back. Now we were talking here something ना, ये कुछ कर रहे थे हम. चलो, this screen is also gone. See, why I don't give printed notes is because yes, sir, if just imagine this you all got as printed and then we would have read and all. Very difficult. Drawing के time you understand this. Nominal GDP, हाँ, I was giving you an example. Nominal GDP 500 and real GDP, which means does not have an inflation, is of 250. Which means the difference is 250. What is the difference known as in economic terms? Inflation. Yes or no? Inflation is 250 rupees. Chalo. Now convert this into percentage terms. We are not children to add and less. We are now converting into percentage terms. So how would I find the percentage? What would I do? What upon what? 250 upon 500 or 500 upon 250. If I want to find the increase in GDP, what would I do? I will do 500 upon 250 because I will then come to know ki base say how much. See, everything is compared with base. So from base, how much we have gone to this thing. Okay, so considering ki 250 hai and we have to find out the inflation effect. So what will you do? You will do 500 upon 250 and you will say ki my increase is 2 times. 2 times increase हुआ है ना मतलब, ठीक है? It is 2x ना, 250 का 2x, ठीक है? ठीक है? Or there is a 200% in. It has risen to 200%. It has risen by 100% to 200%. बराबर? पहले इतना था 100%. Now it has become 200%. Double हो गया है. What did we do here? We did nominal upon real or real upon nominal? We did nominal upon real. ठीक है? Now consider this is year 1 and this is year 2. Consider this is year 1 or year 2. What did we do? Year 2 upon year 1 or year 1 upon year 2? Year 2 upon year 1, which means latest upon Purana. Which means what did we do? We did, can I say, we did current prices or current GDP upon base is always constant. We take base as constant. It might be real, it might be nominal. You might compare nominal to nominal, real to real. ठीक है? Current prices or current GDP to constant prices. Yes or no? What did you do in your test ka example? You took test 1 as constant and then you measured test 2 performance, test 3 performance, test 4 performance. You took this as constant. So from any, see this is maths, this is not economics, this is maths. From anywhere you want to go anywhere, you take base as constant and then you measure the current level. So if I take, for example, if I take 2015-16 as my base year, which means if GDP was 100 in 2015-16 and today in 2020-21, GDP has risen to 250 rupees, it might be due to anything, it might be due to inflation, it might be due to real effect also. We don't know, okay? But how to determine ki what percentage or by what fraction you will do 250 upon 100? Yes or no? 2.5 times increase hua hai. Yes. Tomorrow 2021 to 2022, if it goes to 300, Compared to base, it has risen 3 times. If you change the base to this, it has risen only by 50 rupees, which is 50 by 25, 1/5, again 20%. Okay? So base matters. Normally in inflation calculation, we have one single base, and whenever these news comes about base effect and all, they also calculate compared to this, they also compare to this, they also compare to this. And this took me lot of time to figure out what are they talking about when I was in my first attempt. They compare 250 to 100, and they compare 300 to 250 also, and 300 to 100 also. Okay, every year. So normally in inflation and in GDP terms, they compare quarter on quarter. Quarter of 2021, first quarter to first quarter of 2022, second quarter of this year to second quarter, ऐसा ये लोग compare करते, they compare that. The point we should understand is that in order to deflate, or in order to remove the impact, or in order to understand the impact of inflation, you should do current prices upon constant price. You will come to know na kitna hai, what is the change, you will come to know what is the change. Okay? Or you can do nominal upon real, or you can do current upon constant. You cannot do constant upon current. You have to find out the increase from constant to current. Na, yahan se you are going here. You are not coming ulta. Right? Yahan se you are going here. Understood? Okay? Now this relationship between current, constant, nominal, real, it can be applied to anything, inflation, GDP, interest rates. It is a maths concept, so don't think it is only applicable to this discussion. It is applicable to all discussions. There are nominal interest rate and real interest rate. If I ask you what is the difference between nominal interest rate and real interest rate, answer is inflation. Okay? See, the way I remembered it earlier is ki, NRI is what? Nominal minus real is inflation. This is my way of remembering it. You don't have to do it. Nominal minus real is inflation, NRI. But don't confuse ki nominal plus real is inflation or something like that. Signs are very important. Okay? So this is called as the base effect, or this is called as the base year. Okay? This equation. Chalo. Now reverse, very interesting. Now reverse. If I give you 2x, you know base, you don't know this. You know 2x. Will you be able to find out the third one? Yes. Okay? You know this, you don't know this. You know this. Will you be able to find out this one? Yes. Any two you know, you will be able to find out the third one. Right? So normally in actually policy making, or actual practically what happens is, we get the data of nominal GDP. We get the data of nominal GDP. We don't know real GDP. We have to calculate real GDP. We get the data of nominal because ultimately price into quantity data we get. But we know inflation kitna hai. We have calculated inflation. How do we calculate inflation? The separate topic. Okay? So we know this ratio and we know this, and then we arrive at real. Normally real is calculated. It's a product of the calculation of nominal and inflation rate. This ratio, I want you to remember this ratio. Did we take all the prices and services in this ratio? Yes or no? We have taken GDP, which includes all the goods and services. So this 2x, does it represent the price increase of all the goods and services? Yes. It represents all. There is a possibility that some goods might go down, some goods might go up, and overall 2x is increasing. Overall. In our example, it was only one cake. Let's say there are thousands of commodities. Overall 2x. Okay? When we take this measure of inflation, this measure of increase or decrease in prices for all goods and services, because when we are calculating GDP, this ratio, what are we using it for? Tell me, what are we using it for? Are we using it to inflate real, or are we using it in practical purposes to deflate nominal? I just told you, to deflate nominal. Normally we have nominal data available and we have this ratio available, 2x, 200%, we have this ratio available. So we just calculate 2x, we apply 500 divided by 2 and we get 250. Okay? This ratio which captures the price. What is this ratio? It is capturing the price increase. Na, ultimately 2x price increase hua hai. Okay? This ratio which captures the price increase of all goods and services. All is the keyword. All goods and services in the economy. That ratio which is used to deflate the economy from nominal to real. It is used to deflate from nominal to real. That ratio is called as GDP deflator. Now the meaning is clear. Now the English is clear. It is called as GDP deflator. What is GDP deflator? GDP deflator is nothing but the ratio of current prices of, the keyword here is all goods and services, divided by constant prices of what? All goods and services. We know na, current upon constant. Okay, so if I give you this ratio, if I tell you nominal is 500, ratio is 2x, you will tell real is 250, sir. This is GDP deflator. This is used but not used in economics. What do I mean by that is, imagine calculating this for all goods and services produced in our country. All matlab everything. It's not possible. So it takes 1 year to calculate GDP deflator. Our economists take 1 year to calculate this. So this year's deflator will be available next year. But that is useless, na? Because after 1 year we are calculating nominal real GDP of this year. That is not good, na? So what we do is, we don't take all, we take certain baskets, we take certain goods which are frequently used. So there will be something which is not even used, it is produced but there are very few customers and all. We say ignore that, unka data, the data will come late. So we take most commonly used goods, you can say. So clothing, education, services bhi hai na, clothing, food, fuel, all of these which are most commonly and which have the maximum impact, we take that, we take that and then we use that ratio to deflate it. ठीक है? उस ratio को, that ratio is known by different names depending on what goods and services you are including in the basket. Sometimes called as CPI, sometimes called as WPI, sometimes called as Industrial Production Index, PPI. ठीक है? We'll discuss that in the inflation chapter. But the idea is the same. It is the deflator. It contains the measure of air, how much air is there in that thing. Then from nominal you arrive to real, and then you can begin your analysis. Sir, real, okay. And even in real, which price, market price or factor cost? Factor cost, because everything else is in the hands of government. Okay? We'll continue with basics. There are a few tiny concepts remaining. We'll continue with this. We'll stop here, and I hope you understood this. Please revise this if you did not understand. Ask me if you did not understand. It is very crucial that these 3-4 lectures are embedded in your brains, because see, honestly the fact is, in 30 lectures we cannot cover economics. So in 30 lectures I will bombard you with so many concepts that you have to keep revising. Okay? And I don't know, confirm that, do you get 3 lectures per week of economics and 3 of geography? Is it the pattern? 3 na? So you are getting only 3 economics per week. Okay? You can easily cover those. You can easily revise those. Hai na? So let's say Monday, Tuesday, Wednesday you are getting economics lectures. Clarify the concepts from the book, ask me the doubt, and don't wait till my next lecture to complete these previous lectures. Please be with me. So when I have my last lecture, when I deliver my last lecture, 80-85% concepts, if they are clear na, your work load reduces drastically. Otherwise, you have history, culture, so much of to study. History, though, yaar, I don't know how people study and how people teach. It's very difficult subject to teach, history, right? So we'll stop here and we'll meet in the next lecture. Thank you.